Welcome back to the channel, everyone. Today's video is genuinely important because we're going to break down one of the most talked about new projects in the crypto space right now, Midnight, the privacy-focused sidechain connected to Cardano. Ever since its airdrop and official launch, the conversation has exploded across social media, trading circles, and developer communities. But with the buzz has also come a lot of confusion. What exactly is Midnight? Why was the airdrop only partially released? How does this actually help Cardano? And most importantly, where might the price go from here? In this video, I'm going to walk you step by step through everything you need to know, from market conditions, price action, token supply mechanics, the sudden run-ups, heavy retracements, the role ADA plays, why the tech is so different from older privacy coins and what the next key levels could be. No charts, no screen visuals, and just clear, detailed explanations so you fully understand what's going on. So let's dive right into it. This is not financial advice. Please do your own research before making any decision. Right now, the entire crypto market is cooling off after the volatility that followed the recent FOMC meeting. Whenever the Federal Reserve updates its stance, you typically see sharp movements, and this time was no exception. The broader market retraced across almost every major chain, but within that chaos, Midnight has become one of the most interesting coins to watch. At the moment, Midnight is trading around 0.05 USD, showing a mild 1.8% decline against the US dollar, while still sitting up about 1% against Bitcoin. Its market valuation is hovering near $834.5 million, with an impressive $283 million in 24-hour trading volume. The circulating supply is sitting at 16.6 billion, with the total supply capped at 24 billion. For a token that has only recently launched, those are not the worst numbers you'll ever see. In fact, compared to many new coins that crash immediately after debut, Midnight is holding far better than average. One of the reasons for that stability is the distribution model. Midnight wasn't only airdropped on one chain, it went out across multiple major ecosystems including Cardano, the XRP ledger, Solana, Bitcoin, Ethereum, Avalanche, and several others. To qualify, users needed to maintain around $100 worth of tokens, depending on the chain and criteria. Anyone who met the requirement and took part in the snapshot became eligible. But here's the twist most people still overlook. The Midnight team did not release 100% of the airdropped tokens on day one. Only 25% were unlocked at the launch of mainnet. This wasn't accidental, it was a deliberate attempt to prevent the typical disaster that follows most new token airdrops. Usually, when an airdrop hits, the market gets flooded instantly as thousands of people dump their free tokens. Prices collapse. Liquidity disappears. Momentum dies instantly. By restricting the initial unlock to only a quarter of the total, Midnight prevented that early freefall. Instead, the remaining 75% will unlock gradually, with a vesting period built in. Many users will receive their next portions after 90-day intervals, ensuring that tokens flow into the market slowly instead of all at once. From a market design perspective, this was smart. Now, let's talk about what Midnight actually is, because a lot of people still confuse it with traditional privacy coins. Midnight is not a simple transaction shielding coin like Verge or Monero. It's also not just a Zcash alternative. Those coins focus mostly on transaction privacy, hiding sender, receiver, or amounts. Midnight is something different. It is Cardano's new privacy-centric Layer 1 sidechain, built using zero-knowledge technology but with far broader capabilities. Developers can actually build full decentralized applications, dApps, that operate privately, meaning the smart contracts, the interactions, the data, and the logic inside the dApp can all remain shielded from public view. That's something we've not seen in any major blockchain ecosystem at this scale. To be clear, Midnight is not a Layer 2. It is its own standalone Layer 1, but it depends heavily on Cardano for security and staking. Cardano provides the anchoring mechanism that keeps Midnight secure. Without Cardano's chain, Midnight doesn't function. So even though Midnight has its own tech stack, ADA benefits directly as more developers begin building private dApps and experimenting with new use cases. The excitement around privacy coins isn't new. Projects like Zcash and Dash gained massive traction early on. But Midnight's ability to offer smart contract privacy is what makes it so unique. It basically introduces a category of applications that simply didn't exist before in Cardano's ecosystem. and Cardano needed something like this. For years, people have criticized the chain, saying development is slow, adoption is slow, and innovation lags behind competitors. But Midnight proves that the Cardano sidechain model still has serious potential. Even Charles Hoskinson commented that Midnight might be the beginning of a billion-dollar ecosystem that grows toward the $10 billion range over time. He emphasized that right now, Midnight is only a native token on Cardano, but soon it could expand far beyond that, potentially attracting developers who want to build secure, private, regulated, friendly applications. Now, shifting to the price action, Bitcoin dominance is hovering around 59%. And ever since the FOMC meeting concluded, Bitcoin saw a sharp pullback from $94,489 down toward the $80,200 range. This broader retracement naturally impacted Midnight. Midnight officially launched on the 8th, and at first glance, some people claim it opened around 1 cent. But if you track the major exchange listings, the more realistic launch zone was around 3.30 cents. From that level, Midnight exploded. Not gradually and violently. The price ran 160% upward in just 24 to 48 hours. Some exchanges even briefly recorded highs near 11 cents, though the more widely accepted average sits around 9 cents. That type of early surge usually indicates heavy demand, strong hype, and major exchange support. Midnight isn't being listed on tiny platforms. It's landing on large, globally recognized exchanges, which speaks volumes about early liquidity and institutional interest. But naturally, what goes up must come down. When Bitcoin pulled back more than 6%, Midnight reacted even harder. The token tumbled roughly 43% during the correction. This shouldn't surprise anyone because Midnight has no strong historical support levels yet. Newly launched coins always experience large swings, especially those with high attention and massive initial volume. Right now, the 5-cent region is acting as support. If it holds, Midnight could attempt to move back toward 5.60 cents, a roughly 14% rebound from the current zone. However, the price will only stabilize if Midnight spends time consolidating within a key range instead of spiking wildly. Healthy consolidation helps a new asset build a real structure on the chart instead of just pumping and dumping. Some people say releasing the token to open markets early means whales can accumulate massive positions, and that's true. But early whale involvement isn't always bad. It provides liquidity and stabilizes markets. What actually matters most is whether developers adopt the chain and whether real applications emerge. As far as the launch goes, Midnight performed far better than the average new token. Many projects completely collapse on day one. Midnight did the opposite. It surged massively before retracing to a more reasonable level. The real question now, will 5 cents hold as a foundation for future growth? That's what we'll continue tracking. Midnight is more than just another privacy coin. It is a zero-knowledge Layer 1 sidechain built to bring private smart contract functionality to the Cardano ecosystem. Its airdrop structure, limited initial unlock, cross-chain distribution, and first-of-its-kind development model make it one of the most notable launches of 2025. The price has already experienced extreme volatility, skyrocketing over 160% before retracing with the broader market. But as long as it consolidates around key support zones and developers begin to adopt the chain, Midnight could grow into one of the most influential privacy-based ecosystems in the industry. Thanks for watching. Hit like and subscribe for more daily crypto insights. Catch you in the next one. Stay crypto smart.